Hi, this is James Shrug with Westpac London's end of day report for Monday, August the 13th. Very quiet economic news day today in both the US and Europe. No US data at all released. All we saw in Europe was the Greek GDP report for the second quarter. Now the statistician there doesn't report quarterly figures but reports an annual growth rate quarterly. The economy contracted 6.2% compared to the second quarter a year ago. That's actually a little bit less, not quite as weak as the three economists that actually try to forecast the data expected. But with the statistician having difficulty actually measuring the figures, being short-staffed, and with austerity and uncertainty continuing to undermine the Greek economy, it's really not the precise numbers that are important. I mean, there's been no material growth in Greece now since 2007, and it's continuing to spiral downwards. And that in turn, of course, is causing unease in Germany, where there are press reports today saying that some members of the government were pushing for Germany to veto any further bailout payments for Greece. There are other reports suggesting that Greece is basically waiting for the expulsion order to be issued from the euro. Now, this is just speculation in the media, but its potential veracity, I suppose, is emphasised by those very weak GDP numbers. Now we get figures for France and Germany and the broader Euroland tomorrow, growth figures for the second quarter. Those figures for the broader Euroland aggregate are expected to show contraction. We're on minus 0.7%. I've got to say there's a few indicators lately make me think the pace of contraction may not be quite as steep as that. But as I say, we'll see those numbers tomorrow. But really, the main driver of negative sentiment today, both in the US and in Europe, was frankly the Japanese GDP numbers. There were some upward revisions to history, but the second quarter figures for Japan, just 0.3% growth in the quarter, with a lot of weak detail in the quarter, caught markets a little bit off guard, and that was really all there was to focus on. I mean, an Italian one-year auction went off okay, at a higher yield than last time, and that was about it, frankly. So why dwell on that? I'll give you some numbers. The London market today closed down 0.25%, the French market down 0.25% as well, the Germans off 0.5%. The Spanish market actually managed a 0.3% gain today, but the Italian market was off 0.1%. And at about 6:30 in London in the evening, the New York market's off about 0.5%. Now the S&P 500, I think had 6 up days in a row, which is the longest string of gains since late 2010 for that broader measure of the US market. But it's currently down 0.4%. So that long run of gains has been broken, at least so far today. Of course, US markets are still trading. It's a packed data week coming up, loads of US data. We've got figures in Australia coming up today, Tuesday, on the NAB business surveys coming out, and figures on car sales. And as I say, plenty of US data and important European data to focus on. But today really trade was very thin. I mean, in commodity markets, we're looking at copper prices down 1.2% today, mainly a function of the Japanese story, and also some downward revisions to Chinese growth forecasts that were published by some private forecasters today, following the run of data we saw on China last week. Gold prices today down 0.1%. Oil prices up 0.5%. Oil prices on $93.37 a barrel. The Aussie dollar, certainly during the US morning, the London afternoon, the Aussie was quite a bit weaker. It fell from 1.057 to about 1.051. So quite a bit softer where it's trading now, just above 1.05 against the US dollar than it was, I think, for pretty much most of last week. And that is about it. As I say, not much to report. A short report, therefore, but I'll be back with plenty more tomorrow.